Before we get started, if you want to see more videos like this, hit that subscribe button and like this video. All right, so you're ready to take your business to the next level, and that means you need capital. But the world of fundraising can feel like a maze, right?
Yeah, it definitely can.
Well, think of a private placement memorandum, or PPM, as your compass and map.
Oh, interesting.
It's not just a legal document. It's the story of your business, and it's the key to attracting investors.
What's fascinating about a PPM is that it serves this kind of dual purpose. It's a powerful marketing tool, really showcasing your company's potential. But it also provides that all-important legal protection, ensures that everyone's on the same page, and reducing the risk of those future disputes.
Okay, so it's like a movie trailer meets a legal contract.
Yeah, you could say that.
I'm intrigued, but let's break it down. What exactly ISDI is a PPM, and why is it so crucial when raising capital?
A PPM is a detailed document that's used to attract investors in a private placement.
Okay.
This means you're raising capital without going public through an IPO. You're keeping your company private and selling securities directly to a select group of investors.
So it's a direct line to investors who are looking for opportunities outside the public markets.
Exactly.
Makes sense. But why the need for such a formal document?
Well, think about it from an investor's perspective.
Okay.
They're constantly evaluating opportunities, right? Trying to decide where to put their money.
Yeah.
A well-crafted PPM gives them that in-depth information they need to make that informed decision. Outlines everything from your business model and your financial projections, even down to the risks involved and the terms of the investment.
I can see why that would be important. No one wants to invest in a black box.
No.
Transparency is key, especially when it comes to financial matters. So let's dive into the heart of the PPM. What are the essential components that make up this document?
Well, a PPM is typically structured into several key sections,
Okay.
each serving a specific purpose and just kind of painting a complete picture for potential investors.
Okay, let's unpack these sections one by one.
Sounds good. The first section is the executive summary.
Okay.
This is your chance to grab the investor's attention right from the start. Imagine you only have 30 seconds to pitch your business. What would you say?
Yeah.
That's the essence of the executive summary. Provides that concise overview of the opportunity, highlighting what makes your company unique and why it's worth investing in.
So it's like a hook that draws them in and makes them want to learn more.
Exactly.
Got it. What comes after that initial hook?
Next up, you've got the offering terms. This is where you outline exactly how much capital you're seeking to raise and the types of securities you're offering.
Okay.
Are you issuing equity, debt, or maybe a combination of both? This section lays it all out.
So this is where the rubber meets the road, where you get specific about what you're asking for and what investors will get in return.
Yes.
Interesting. What else do investors need to know at this stage?
Well, the next section delves into the company and management.
Okay.
This is where you introduce your team and showcase their expertise.
Oh.
Remember, investors aren't just investing in your idea, they're investing in the people behind it.
Right.
Highlight your team's experience, their track record, and their passion for the business.
I love that it's a reminder that business is about people.
It really is.
You can have the greatest idea in the world, but without a strong team to execute it, well, it's just an idea.
That's right.
So after we've met the team, what's next?
Next, we get into the use of proceeds. This section outlines how you plan to use the funds you raise.
Okay.
Will you invest in product development, expand into new markets, hire key personnel?
Yeah.
Be specific and be transparent about how that capital will fuel your growth.
Okay, so it's not just about asking for money. It's about showing investors how their investment will be put to work to create value.
Exactly.
Makes sense. What comes after we've mapped out the use of funds?
The next section is all about the business of the company. This is where you dive deep into your business model, your target market, your competitive landscape, and your growth strategy. This is where you paint that vivid picture of your company's potential and really show investors why you're positioned for success.
This is where you really flesh out the story of your business, right? From the big picture vision to the nuts and bolts of how you're going to make it happen.
Yeah, that's it.
What comes after we've painted that detailed picture of the business?
Well, the next section focuses on the financial information.
Okay.
And this is where transparency is absolutely crucial. You'll need to provide detailed financial statements.
Yeah.
Including your income statement, your balance sheet, and your cash flow statement.
So this is where the numbers come into play.
Yes.
Investors want to see the hard data that backs up your projections. No hiding anything here.
Nope. Honesty and accuracy are paramount in this section. You want to build trust with potential investors, and that means being upfront about your financial performance.
Okay, we've covered a lot of ground already. The executive summary, the offering terms, the team, the use of proceeds, the business overview, and the financials. It sounds like a pretty comprehensive picture of the company. What else is there?
Well, no investment is without risk.
Right.
And the next section addresses that head on. This is the risk factors section.
Okay, this sounds a little scary.
It's not about scaring investors away,
Okay.
but rather about being upfront and honest about the challenges your business might face.
Sure.
This could include competition, market fluctuations, regulatory changes, even potential disruptions like we saw with the pandemics.
So it's about managing expectations and ensuring that investors go into the deal with a realistic view of the potential downsides as well as the upsides.
Exactly. By addressing these potential risks openly and honestly, you're demonstrating integrity and building trust with those potential investors.
This is where you really showcase your understanding of the market and your ability to navigate potential challenges. What comes after we've laid out the risk factors?
The next section focuses on the subscription procedures, which explains how investors can actually invest in your company. This includes details on how to subscribe for securities, the minimum investment amount, and the closing date of the offering.
So this is the practical how-to guide for investors who are ready to take the plunge.
That's right.
Makes sense. What else is included in a typical PPM?
Following that is the exhibit section. This contains all the supporting documentation that backs up the information you presented in your PPM.
Okay.
This could include things like your company's articles of incorporation, bylaws, intellectual property agreements, and any other relevant legal or financial documents.
Okay, so this is where you provide the evidence to support your claims.
Exactly.
It's all about transparency and due diligence.
That's it. A well-structured PPM is a comprehensive and compelling document that provides potential investors with all the information they need to make that informed decision about whether or not to invest in your company.
This has been incredibly insightful. Thanks for breaking it down step by step. It's clear that creating a PPM is no small feat.
Yeah, you're right.
It's a complex process.
It is a complex process, but it's an essential tool for any entrepreneur looking to raise capital effectively and responsibly.
It's the foundation for a successful fundraising journey.
Absolutely.
Now, before we move on to the specifics of crafting each section of the PPM, I want to touch on something you mentioned earlier, the importance of legal protection. Can you elaborate on that a bit more?
Sure. A PPM serves as a legally binding document, and it protects both the company and the investors.
Okay.
It outlines the terms of the investment, the risks involved, and the responsibilities of both parties.
So it's a safeguard against misunderstandings or disputes down the line.
Exactly. Sets clear expectations and ensures that everyone is on the same page from the get-go.
That's crucial. It sounds like having a PPM is not just a good idea, it's a necessity.
I would agree with that.
But I'm guessing it's not something you can just whip up on your own, right?
You're right. You're right. Creating a PPM, it's a collaborative effort. You'll need to work closely with experienced legal counsel who specialize in securities law.
So it's about having the right expertise on board to navigate the complexities of securities regulations.
Absolutely.
And depending on the size and complexity of your fundraising, you might also want to bring on investment bankers.
Yeah.
To help structure the deal and identify potential investors.
That's a great point.
It sounds like building a dream team for your fundraising campaign.
Yes.
Now, I'm curious about the practicalities of using a PPM.
Sure.
When exactly does this document come into play during the fundraising process?
You don't just send out your PPM to anyone and everyone.
Right.
It's a confidential document.
Yeah.
And it's typically shared with potential investors after they've expressed interest and signed a non-disclosure agreement or NDA.
Okay, so it's all about protecting confidential information and ensuring that it's only shared with serious potential investors.
Right.
But before we get to this stage of sharing the PPM, how do you initially pique investors' interest?
Right.
How do you get them to that point where they're eager to learn more and sign an NDA?
Well, that's where the teasers come in. Think of teasers as these short, attention-grabbing summaries of your business and the investment opportunity. They're like movie trailers, designed to generate excitement and intrigue.
So it's like a sneak peek that leaves them wanting more.
That's a great way to put it.
I like that.
Yeah. You want to highlight those key points that make your company unique, and of course, that potential for growth and returns.
And those teasers would typically be shared through networking events, online platforms, even direct outreach to potential investors, right?
You got it. It's about casting a wide net and getting your message in front of the right audience.
Makes sense. So you send out your teasers, you spark some interest, you have some conversations, and then if an investor is intrigued and wants to learn more, you have them sign an NDA and then share your PPM.
Exact.
It's a strategic process of gradually revealing more and more information as you build trust and momentum.
You got it. It's a delicate dance. You've got to balance that confidentiality with the need to share enough information to pique their interest.
This is all incredibly helpful. Thanks for guiding us through the process. It's clear that a PPM is a powerful tool for any entrepreneur looking to raise capital. But it's also clear that it requires careful planning, expert guidance, and a strategic approach.
I think that's a great summary. It's not a DIY project. But with the right team and the right approach, a PPM can be the key to unlocking that incredible growth for your business.
And speaking of unlocking growth, let's not forget about the power of business credit.
Oh, absolutely.
It can be a game changer for entrepreneurs looking for alternative financing options or ways to stretch their capital further.
Yeah. Business credit can open doors to some amazing opportunities, especially when it comes to accessing those 0% interest credit cards for things like down payments, inventory, even covering payroll expenses.
Exactly. It can give you that extra financial flexibility to fuel your growth without diluting your equity.
I'm glad you brought that up. It's such a valuable tool that every entrepreneur should be aware of.
If you're interested in learning more about building business credit and taking advantage of these amazing opportunities, I highly recommend checking out fixedflipcredit.com.
Great resource.
They have the best business credit mastery program online, and it could be the key to unlocking your financial freedom as an entrepreneur.
It's a great resource for anyone looking to take control of their finances and build a solid foundation for their business.
All right, that's it for this part of our conversation about raising capital with a PPM. We've covered a lot of ground, from the basics of what a PPM is and why it's so important, to the strategic steps involved in creating and using it effectively. In the next part, we'll dive deeper into the specifics of crafting each section of the PPM to create a compelling and persuasive document that will attract investors and help you achieve your fundraising goals.
I'm looking forward to it. It's going to be a fascinating look into the art and science of crafting a winning PPM.
Until then, keep those entrepreneurial spirits high, and we'll see you back here soon. If you found this information helpful, hit that subscribe button and like this video.